Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on April 11th. So obviously another week of huge volatility. The market kind of had that post-tariff reveal mini crash into Monday. And since then, there's obviously been a lot of news, including the tariff delay, but the market's been hacking around wildly without much more price progress lower, which I think is a short-term ray of light. And really, my thoughts right now are just completely short-term versus intermediate to long-term. Short-term, I'm not saying there's a 90% chance or anything, but I still think the odds favor the market probably has found a low it can work off of. Now, obviously, if we can't bounce for the next 5, 6, 7 trading days, that wouldn't be good. But if we can start to bounce, can start to resist some bad news that's probably going to be coming out on the economy and stuff like that, that would be a positive sign. So, if you're a shorter term player and you want to probe whatever that means to you, or maybe you got stuck with some broken stocks and maybe you take a look at some charts this weekend. Hey, if this stock gets up here, I'm going to let some of it go, that sort of thing. That's up to you, but I still think there's a decent chance. Ideally, we can start to repair some of the damage here of the last 7 weeks going forward. Now, with that said, intermediate to longer term, nothing's changed. The trend is still clearly down. The indexes haven't even bounced to their 25-day line. Longer term trend down. Most stocks are below 50, 200-day moving averages, so on and so forth, okay? So I still think it's going to take time, some patience. I'm not saying 9 months or something like that. I just mean, it's going to probably take some time. I'm all for a V bottom, but probably take some time to build a bottom here. The good news is I am seeing, and we're going to go through, more stocks that are resisting the decline. They're easier to spot for sure. They stick out like a sore thumb. And even some names that have been beaten down that are showing a little bit of initial signs of bottoming in terms of accumulation. So right now in Cabot Growth Investors model portfolio, we haven't done anything. We're still 87% in cash. So, actions speak louder than words. We're very defensive at this point. Could put a little money to work if the buyers actually really show up, not just for 1 or 2 or 3 hours on some news headline. But for now, I'm comfortable remaining very close to shore. Okay, let's hop into the charts. We're going to start with Market Surge, Product of Investors Business Daily. You can learn more at marketsurge.com and just run through the major indexes. So you can kind of see this was, we started to fall apart here, and then this boom was the initial, this was last Thursday, was Wednesday night was the tariff reveal with all these tariffs. Boom on, let's see, this was Thursday, Friday, and then Monday we actually finished kind of unchanged, but we had a huge puke during the day. And that to me is sort of the low that ideally the market can work off of. This is the NASDAQ. You can see we're still way below the 25, 50-day moving averages. But so far we have been, I'm not trying to make this out to be some great chart or anything. It's not. But at least we're kind of holding these lows. Even today, there's all this stuff going on with the treasury market and the dollar. Who knows what the hell is going on. But the stock market seems to be handling itself decently so far, okay? S&P 500, everything's pretty much in gear, which is another thing that's quote-unquote good of the market. But here was your kind of puke low here on Monday. And, we're 400 points on the S&P above that. So there's definitely room to kind of hack around here. And the longer we can kind of hold up here, number one, and then eventually you'd like to see us attack higher. Even if this coming rally, I would say the odds are pretty strongly against the next. If we rallied from here, we just keep going straight up. I'm all for it. We probably need to build a bottom like I was saying earlier, but you'd like to see the market and some buyers actually arrive and sort of attack some of these resistance areas, as opposed to just having, so far it was basically a 1 day or half a day rally for the most part on the tariff delay, okay? So just running through, this is the small caps, same sort of thing. They're a little bit weaker, the New York Composite. So the trends are clearly down, but we have something that ideally we can work off of here in the days ahead. Right now, I would just say, when you're looking at, this is interest rates. So this is the 10-year note, which we look at. And during the initial stages of the decline, you can see that interest rates kind of acted like they usually do. When the market's getting hit, economic fears, interest rates fall. Now, whether there's this basis trade, which I would advise you not to read about, because it's just going to, somebody's got leverage bets on this and that. Or whether it's maybe China or someone else is dumping treasuries to play tough in the trade war, who knows. Either way, you can see interest rates are really spiking here. And you can see this is the dollar, which it's a little bit hard to see on this chart, but these are pretty extreme. When the dollar is falling 1 or 2% a day, it's not like an individual stock, it can be kind of destabilizing. That's the fear anyway, okay? Now, I'm not trading on this. I'm going to be looking solely at the primary evidence, which is the indexes, the trends, potential leading stocks, things like that, and potential leading sectors. But it's just good to be aware of this. So far, I would actually say that given what's going on with interest rates the last couple of days, you can see the spike, especially today. I actually think the market's handling itself okay. We're talking, this is very all micro term here. So if, the longer that happens, maybe rates come down next week, and then, hey, maybe the market can actually pop higher. So, so far it's just something to be aware of, but it's certainly on the mind of most investors, okay? Back to the market for a second. Let me change charts here. Talk amongst yourself. Okay. We're going to go here to, so I just wanted to show you, we did this a little bit last week, and I don't think you can't see my arrow on the chart, but it's there. For some reason, it doesn't capture it. But this is a 5-day. I just want to show you a couple things. We just saw a lot of, last Friday and Monday, and we looked at this a little bit last week. We had over 1,000 new lows on the New York Stock Exchange and the NASDAQ, by the way, on both Friday and Monday. Okay, and that's very extreme. It can always get more extreme. That's why I personally don't buy oversold conditions, because that 1 or 2 or 3 times when it doesn't work, it really doesn't work. Okay, and maybe this is one of those times where we just keep going down because trade war or whatever, recession. But either way, you want to be aware of it, because a lot of lows have these sort of conditions. Okay, shown here is the 5-day moving average of the VIX as of a half hour ago when I pulled up this chart. And the red line, this chart goes back 20 years. So the red line is where we are now, basically. And you can just see basically only the pandemic and 2008 were higher than this. Now, they were quite a bit higher. So, I mean, that's what I mean. If this is kind of the big one and we're just going to get really nailed, like, we could keep going. But it's good to be aware of the fact, like, hey, it's pretty extreme out there, even more than a lot of these 20, 25, 30% declines we've seen, which we have had, by the way, over the years. In the last 20 years, this is much more extreme than that, okay? But you can look at the VIX. We looked at new lows last week. This is something, and I'm going to change this number here so you can see it's about 20. This is the 5-day moving average of the New York Stock Exchange. It's called the bullish percent index. It's a point and figure thing. I'm not going to get into it. It's basically how many stocks are holding higher highs versus not, okay? Right now, lower means everything's getting destroyed. So the 5-day moving average is down at 20. It's probably going to keep dropping here. And again, you can just see it's down to the depths of 2022. It's down to the 2011, basically only 2008 again in 2020 with the things that got more extreme. So we could get more extreme here. Maybe we have another puke phase next week or something where you get this. But I would just say time-wise, it's unusual to kind of have super, super intense selling and then to just keep going down. Usually there's going to be some relief from that, even if it's not the ultimate low. And that's just kind of what I'm keeping in the back of my mind. Again, we haven't bought anything. We're 87% cash, so I'm not saying go out and anticipate the low, but you just want to have your antenna up and your game plan ready. I know it's stressful with the volatility, but when I see stuff like this, that's, once or twice in the past, this chart goes back 20 years, but I could go back 40, 50 years, and it's really, we're at conditions here that's happened like, 3, 4, maybe 5 times in like 50 years type thing. So it's just good to be aware of in case we do get a rally. And this is one reason why I think odds favor, no guarantee that, we're probably near not a tradable low, but a low that the market can work off of, okay? So let's hop back into market surge real quick. Boom, boom, boom. Okay. So, I just showed you there's not much with the indexes, rates, dollar. I guess that's if you want to watch it. What I'm really focused on now is just running my screens, trying to find things that are relatively strong and aren't completely defensive. Obviously, gold stocks look good, and if that's your thing, that's great, although I think they look a little extended here. Gold, precious metals, stuff like that, defensive names. But I'm looking for things that have at least some growth story that are holding well, which is, it's the unusual that counts in the market. So first thing is just stocks that are holding up well. And a lot of these I've mentioned over the weeks, which is a good thing. You want to see things, sometimes you get things that look good today, then they crash next week, and then you have to kind of try to replace it. We're still seeing a lot of things hold up well. This is Penumbra, PEN. There is some old overhead here, but by the time, let's say just a few weeks from now, the market breaks out and Penumbra is a leader, PEN, there is some old overhead here, but at that point, it's going to be over a couple of years old, so I'm not too worried about that. And I put way more emphasis on what's happening now. You can see on the weekly chart, it just looks like a very normal, this is 7 week, basically a double bottom base. I mean, you would never know the market's in mayhem right now. It looks very normal. It's hit the 50-day line here recently. again, next week it could fall apart, but so far showing great relative strength, okay? Marex, MRX, this is actually a bull market stock, which I find incredible, but it's a British company. They're more levered to commodity markets, commodity trading and volatility. So they're actually cleaning up here in terms of the volatility. But even so, the stocks usually get hit in this environment, anticipating things getting worse. But obviously, you can see after getting, pretty sharp 25% decline initially, MRX has climbed back, actually touched new highs on Wednesday, pulled back, but still very strong, relatively speaking. GeneDx, this is another one. I like to see these names this is WGS. It was holding up well, and then it kind of not melted down, but, it went from 108 to whatever, 75, call it, okay? Actually lower than that, probably like 73. So it fell pretty sharply here. It is a volatile stock, but I like to see how it's snapped back this week, okay? And again, you kind of have this low to work off of, and overall it looks like kind of a normal pattern. So WGS clearly. CrowdStrike, which kind of intrigued me. The stock showed some, this is CRWD. This is when it had its snafu there where it's halted. I shouldn't laugh about it, but it halted like the global economy. Okay, so, the reputation took a hit. The stock came back and actually tightened up nicely here and broke out and had like a little mini run before the market topped out, okay, right here. So then what happened? Well, it got clonked with the market, boom. But since then, holding the early March low, pretty much held the 200-day line, give or take, and actually touched its 50-day line. Okay, you just have to go to the market. Here's the S&P 500. Even on this rally day, we're up here, okay, and the 50-day line's up here. So not even close to touching the 50-day line for the S&P or the NASDAQ, okay, just if I can type it, that sort of thing. And then you have something like CrowdStrike, which clearly is showing relative strength and holding in there pretty well so far the last couple of days. Yes, it has overhead. Yes, it has work to do, but so far definitely resilient. Netflix, NFLX, same sort of thing of CrowdStrike, above the 200-day line, near the early March low, almost touched the 50-day line. We're kind of grading on a scale here these days. So in terms of, Mag 7 big cap names, Netflix definitely one of the better looking ones. I will say some of these names, I'm not mentioning some of what's happened before. I would prefer a name that hasn't had a run like this. Okay, WGS has had a huge run, that we just mentioned, right? This was one of these things. But I am, for the moment anyway, I'm definitely putting more emphasis on the recent action. And if the stock is holding up in this environment, it's probably telling you that even though it had a big run, there's still people out there that want to own it. We'll see how it goes day by day, week by week, but so far so good for these sort of names. AXON Enterprises. Now, I have to admit, this sort of action right here, this is AXON. We owned it. We made some pretty good money on it. And then it kind of had this double top. And this is something that it's not ideal. It probably is going to create a lot of resistance. So again, down the road, if I'm selecting between, there's 10 of these stocks, this one might be a little bit lower on the list. But right now, among thousands of stocks, AXON is, holding the March low, holding the 200-day line, again near the 50-day line, showed a little bit of volume accumulation this week, or support, I guess I would call it. So let's just see how it goes. I do think this will probably be a tough nut to crack, but so far so good on AXON. Lifetime Holdings, again, you're seeing some of these double bottom LTH, double bottom patterns. This is like the fitness equipment. It's a little bit brief, honestly, at this point. 1, 2, 3, 4, so call it 7 weeks. Yeah, I think most of these are 7 weeks with the market, but it's kind of a double bottom base with a shakeout, okay, below that low, holding the prior low, above the 200-day line, at the 50-day line, same sort of pattern here. Okay, pretty good story. And it's one of these things like, say we were going to get a V bottom in the market and we took off, and whatever that means, tariffs are off and everyone's, tax cuts and whatever. A break above here or thereabouts would be like a legitimate breakout, in the stock. So you're kind of looking for these names where if the unthinkable happens, which is, hey, we're at a bottom and we skyrocket from here, you want to have at least a list of names that you can act on just in case. DoorDash, again, it's had a big run, and it did get hit initially, and then it held up a little bit because it got added to the S&P 500. But again, kind of a double bottom with shakeout and then a nice accumulation day. We'll see how it goes. Touch the 50-day line. It, needs work, but still acting pretty well. Insulet's another one, PODD. We've talked about this before. Holding the low, holding the 200-day line, nearly touched the 50-day line. Not that far overall from new highs. Now, it's also not far from maybe opening up on the downside. So I'm not telling you to go buy these here, With a lot of these, it might actually be safer to buy them on the way up, meaning like if you're going to nibble if it rallies. If it doesn't, you don't touch it. That's one thing we've been doing in Top 10 Trader, and it's kept us out of a lot of trades, but we'll see how it goes with some of these. Another thing to mention, I'm throwing a lot of names at you, so it's probably a pretty good video, a lot of free information. We're seeing some things this week, despite the market's volatility, where I call over the top, which means the stock got hit, usually hitting like a new multi-week low. The next week, which is this week, it rallies back in a big way on even higher volume than the week before, and usually pretty big volume. So this is Palantir. Okay, it's still 31% off its high. It's not like it looks great. But you can just see on the weekly chart, it's actually going to it could come in as one of the heaviest volume weeks in many months. We'll see how it closes. But either way, you can kind of see that sort of action where the stock obviously got hit, tried to hold up, but then just kind of puked with the market and then snapped right back. Okay, so we'll see how it goes, but so far so good. GE Aerospace, not as pristine as not that Palantir is pristine, but not as good as Palantir. But again, you can see big selling last week, breaks the 200-day line. This week, it's met with even bigger volume on the upside, okay? It's not a guarantee. It's just a sign of the supply and demand dynamic in the stock to this point. So if we could follow this up with another nice week on big volume next week, all of a sudden you're saying, hey, wow, institutions really jumped on this thing, okay? And last but not least, these are not my cup of tea, just disclaimer, but I do look at a lot of stuff, so just sharing information. One thing, if you're looking at beaten down stuff, again, some sort of resilience near the recent low, number one. And then number two is, volume, okay? You had some pukey volume on the way down. That's not surprising. Is that followed up with not one day, but a few days, either one day of like extraordinary volume or a few days of big volume buying? So this is Samsara. It's buried. It's got a lot of overhead. Like I said, it's not my kind of chart, but I did notice 3 days of big volume buying here off the low, and so far holding pretty well. This is kind of sometimes you see it as the initial phase of a stock kind of saying, okay, I've gone down enough and I'm holding up. Okay, can always change, but you just kind of take a look at it. Okay, GE Verona, this is one of the big winners. Then it got clonked with the it kind of got lumped in with the AI stocks because of electricity and all that. So the stocks had a big correction, but kind of pretty much held the 200-day line. Again, 3 big volume days of buying this week, holding up so far, touched the 50-day line. So this chart actually is one that could round out. I mean, it's going to take some time, most likely, but could round out, okay? And then even stuff like, say, a Robinhood, that, again, it's not my kind of chart, but 200-day line, and then Wednesday's volume on the big tariff delay or whatever, I think was the biggest daily volume it's had. I mean, it's certainly on this chart, and I forget. I went back and looked. I think it's either all-time or it's been for quite a while, okay? Yeah, I think it was an all-time high of daily volume, or maybe since the pandemic. Just saying, like, a bunch of people stepped into the stock. It's very short term. It's 1 day, but okay, you're just seeing a little bit of that. Even something like a Wingstop, which has gotten destroyed. Okay, but good. It's a long-term kind of cookie-cutter story in a long-term downtrend, in an intermediate-term downtrend. Not something I would touch. But again, you're seeing the low here. It's been grinding higher and actually touched the 50-day line here. And I think it's been up. Before this week, it's been up 3 weeks in a row here, and it's basically flat this week. So it could be 4 weeks depending how we close today. Okay, so we are seeing these ones at the end were more just things I noticed, but we are seeing a decent amount of stocks resist. It's easier to spot them because the market's in tatters, of course. Okay, and we'll just see how it goes. Okay, here's the NASDAQ on the weekly chart. I'm not a big index volume guy. Or exchange volume. There's a lot of funny things that happen. But we did wipe out some lows here. We did wipe out the lows from last year on these corrections, which is not unusual during a big wipeout. And let's just see if we can hold this low. The longer we can hold this low right here, which we're still 1,500 points above, the longer we can kind of hold up on this low, especially with some things that are getting a little awkward in the market like interest rates, I think the better the chance that we can bounce from here and start to test some resistance levels and see how it goes. My guess is if we do rally for 2 or 3 weeks, people will all of a sudden be a little complacent again, or short-term complacent. Maybe then we come down and retest or whatever. But so far, just looking at the here and now, I still think the odds are okay that we've hit a near-term low that we can work off of. And now let's just continue to take it day to day, week to week, both for the market and also for some of these probably more important, for these potential leaders to see which ones are going to really be in pole position when we do come out of this mess, which we will. And there'll be a lot of names that can really have very nice and profitable sustained runs. Okay, that's long enough. That's enough for today. That's all the time I have. Thanks for watching. Be sure to come by again next week for another Cabot Weekly Review.